Thanks everyone for being out here. So we're going to try and make this a little bit conversational, or at least as much as possible. I might stand a little bit here as well. I like standing, much like Patrick. So we just start out just real quick. If everyone can give like a 30-second introduction of who you are, what brought you here, and then we'll jump into the meat of it. Start. Fred.
Sure. Hi, my name is Fred Gross. I started in the cannabis space as an investor about 2 years ago. I moved from investor to employee to entrepreneur within the sector within that 2-year period. I was running a hedge fund prior to that. Dodd-Frank was passed. It kind of caused a lot of pain for us. So I somehow stumbled into this space, and now I'm running a financing company that is not exclusive to cannabis, but it's looking to help startup businesses with short-term loans.
Yes, my name is Steve Van Dyke, and I ran a $1.5 billion hedge fund for 30 years, and after the recovery in the markets in 2008 and 2009, I decided basically just to run my own affairs and brought in a couple of people that I had worked with over a longer period of time, as long as a decade, and was introduced to the cannabis industry a couple of years ago and have gone pretty deep in at least many investments, which I'll be going into, but never thought I would be doing it a couple of years ago.
Hi, Charlie O'Donnell of Brooklyn Bridge Ventures. My fund is a seed fund and one of the few generalist funds to not have included a morals clause in their docs. So I do a very wide range of investments and don't really, it's kind of funny that I'm here because I don't think of myself as a cannabis investor, I'm just an investor. And recently led the seed round of Seed CX, and so I guess that's why I'm here.
So I think there's a common misconception out there that you know, being in the marijuana industry, the cannabis industry, is a sort of a license to print money. And that this is really easy. The reality, I think, is this is extremely difficult. These businesses are operating in at best, somewhat of a gray area, legal gray area. When we work with clients, we always one of the first things we ask them is, how much have you budgeted for this project? How long do you think it's going to take? And once they tell us, the answer is always it's at least double both of those. So this is challenging. So this panel is supposed to be about reflections. Everybody on this panel here has experience actually putting money into the space, seeing how it's worked. I'm sure everybody has seen positives and negatives and certainly their share of challenges. So I think probably the best way to start this off, and maybe we'll go the opposite direction this time. Charlie, if you want to start, if you guys could each take a couple minutes and talk about some investments that you have made in the space and the lessons learned, positive and negative, from those experiences.
Sure. As I said, I invested in a company called Seed CX. What they do is they are building a commodities and derivatives exchange for hemp and cannabis. So it's essentially a fintech play. And the biggest challenge has actually been finding co-investors, because most of the institutional funds can't touch this space. And so one of the things that I would sort of caution other investors is, whatever you're doing, make sure you are being extremely conservative about cash flow and timelines, because unlike in other spaces where there are sort of potentially some tried and true metrics where you say, oh, well, if we seed a company, we know that if we hit 100 MRR in a business SaaS play, that somebody will come along and lead our Series A. The funding landscape is very different than in other companies. You're dealing with a lot more individuals, which it's like herding cats to get 20 people to come into a round. And so for me, if I were to continue to do investments in the space, it would be something that has the ability to achieve cash flow in the near term, is more likely to potentially not need another round, versus something that was going to require $50 or $100 million in the future to get to an IPO.
Yes, the way what always amazed me about this business is the lack of capital, and I was fortunate enough to be able to put 8 figures of my own money into a series of businesses I'll touch on briefly, and they all have some synergies, and I'm trying to do a vertical on these. The first being, I got involved in a large marijuana grow in Salida, Colorado, where a gentleman had the licenses, he had the know-how, but he didn't really have the capital, so I provided the capital, and today we're fully up and running, and it's a real operation. With that, I had to learn the lesson that I had to, another company I sold, I had to bring the entire management team, move them from out of state to Colorado, basically not to be an absentee owner and to be there. Probably the smartest thing that we did is that in Salida we had the ability to buy the 23 acres surrounding our property, so under one license we can have almost infinite amount of grow that we can put up outside our indoor hydroponic grow. We can do some greenhouses. The second is that I got very heavily involved in the opening round with a company called Hyper, which is the PayPal to the marijuana industry, and so they're the ones that actually are allowed to do banking now. It's their secret sauce that we're able to have full banking. They go into dispensaries, you can use a credit card. The round of financing that we did, there was another round that was 5X just 18 months ago from where we put capital in. We think that could be one of our larger home runs. I'm on the board of both those companies. I'm also on the board of the company which is the parent company to Willie Nelson. They're looking to have a growth area for their product. They were looking for someone to supply them. We probably took 25 meetings and 10 business dinners to go over a lot of this. So, I think this gives the Willie Nelson people an extreme advantage, because not only do they have very talented management, they have now a large supply base in our cost structure, which we believe is lower than most, to be able to supply them and give them the go forward, not only now in Colorado, but when laws change to go into other states. So those are kind of the three that we've looked at. I'm on the board of all three, and the first two I can identify as having positive cash flow, if not now, certainly by the middle part of 2016.
So it was pretty funny earlier because Brendan and Duma were up here, and those were actually the two first companies that I looked at as investments in the space. So it was kind of interesting to see them up here together. Ended up actually investing in Duma's company in his first round. I've also invested in a company called M. Hardeen, which is a turnkey cultivation company holdings company located in Florida, but they're most operative in Colorado. I think the biggest takeaway I've gotten over the last 2 years is the trouble with visualizing the exit strategy. 2 years ago, a year and a half ago, I think that the idea of the S1 as a pre-revenue means of trying to access cheaper capital, I think has been a serious fail. It's not cheaper capital if you're issuing stock and stock trades 60, 70, 80% lower, and there's no liquidity, obviously. That's been frustrating for me. My place in this really has been, from a professional standpoint, I was originally going to be launching a fund at the beginning, in the middle of this year, at the middle, and I had to listen to my investor base. I had gotten a few people invested in some individual equity deals. Those deals are hard to monetize at the moment. I like the investments a lot. It's just a matter of when are you getting your money out. I've advised most of the firms that I've been invested in to hold off on filing the S1 and look at concentrating on generating revenues and creating profits, and then your exit strategy will find you. So I listened to my investor base, and they all wanted to see more upfront returns. I got contacted by a large greenhouse group in California. They wanted me to do basically purchase order financing for lights that they were buying in Holland. And I suddenly came onto something. I started to get contacted by other companies with those needs. I've been focusing mostly on ancillary companies, not exclusive to cannabis. I have 2 deals that I've invested in that are not cannabis. And we'll see what the future holds. I'd still like to be able to launch a fund. I just for now, it's not something that I think, especially with the heavy equity investments that I already have personally, I don't necessarily think it's the right choice for me at the moment.
So a couple of you hit on something I'd like you to spend a little more time on, which is sort of short-term returns versus long-term or longer-term exit strategy, and how you approach that in this industry. There's a sort of big divergence of opinion when you talk with folks who make investment in the space in terms of what they're looking for and what they think the smartest strategies are. So I'd be curious to hear you guys talk about your philosophy when it comes to what you're looking for in terms of short-term and long-term returns in your investments.
Yeah, just to be clear, when I say that a company should have a means to generate revenue in the near term, that's not necessarily saying that I want a short-term return, but that I know that they have to find a way to de-risk future financing. And one of the ways you can do that is obviously make your own money and not need to go pitch again, right? But for all of the companies, I mean, I invest at the very earliest of stages. I have a 6, 7, 8 year time horizon for how long it takes to build a big company, and that necessarily hasn't changed in this space, but it's more along the lines of how are we going to get from year 1 to year 8? And I think in a lot of instances these companies are going to have to get there on their own weight. Although I will say though that as I've sort of tried to syndicate the rest of the Seed CX deal, I am pleasantly surprised at the number of VCs who have told me that they have a clause that prevents them from coming into their space, but that is the first thing they want to negotiate out in their next fund, because they see the opportunity as being too large, and especially in this very heated market where it seems like all the VCs sort of go after the same thing and pay up, and then here's an area where, comparably you've got, reasonably priced deals compared to, the latest thing coming out of Y Combinator in the Valley. And, if they want to make returns for their investors, they don't see a good reason not to be in this market. So, my hope is that, financings in 2 or 3 years around the next fund cycle will be easier for these companies.
Even though we're longer-term investors and we have the luxury of doing that, I always use the term that we're somewhat like a race to the moon, because as the previous panelists have gone over, the competition is not allowed to come in yet. So our plan is to go into businesses that others eventually will want to buy, and it is true, we probably have spent a lot more than we thought going in. It's been a lot harder than we ever thought it would be. It's required a lot of super managerial talent to come in and run these businesses. I've had to bring on resources of people I've known over 30 years. But I think at the end of the day, because we have the luxury of being kind of first mover advantage and putting up a huge grow facility, being able to deal with a technology company, forming alliances with the Willie Nelson people, it allows us to build something that when the doors do open, because we're building a top tier situation that someone will want to scale into, they're not going to want to buy something that's small. They'll want to go to someone that has some pretty good capital involved. It probably also we put a lot of good policies and procedures and compliance. I joked in the break that all the attorneys that were up here 2 panels ago, we paid all of them a lot of money, all of them. So doing it right, dotting I's, crossing T's, and having a very large synergistic vertical company that will be ready for someone, whether it's a liquor company, a tobacco company, whoever. This will be someone that we hope to at least have it set up should that day come.
Yeah, I totally agree with that. Scalability, I think, is definitely the key in all of this, especially from an investing perspective. In terms of the short-term versus longer-term type returns, they're running a finance type company or running a fund. I see there being a lot of similarities. It's very hard to have assets under management and find investments whereby you can actually build a diversified portfolio and not have too many investments. From what I've been able to see, there's so many opportunities out there to get great returns in the short-term financing space of loans from anywhere to $50,000 to $250,000. But if you're planning on ramping up and planning on trying to manage, say, $5 million, you're going to end up with an enormous amount of investments, and it's really hard to track those investments. I think the same is echoed in the equity space, though I think we've seen bigger deals come through, more larger deals come through recently. But it remains a challenge. I've, for now, been very focused on the short-term space. There are more opportunities than I can fund at the moment. So I'll be looking to actually raise more capital at the beginning of 2016. But yeah, I think that the two, if you're looking short-term and you're looking long-term, I think that the two have very similar structures if you're trying to manage those portfolios. However, the two are very dissimilar in many ways.
And so, let's talk a little bit about diligence. This is a space I think is notoriously difficult to do good diligence on investment. Right, this industry is so new. There's not really a lot of comparables to the companies you're going to be looking at. There is nobody that has long-term experience that you can point to, at least in this industry. And it's federally illegal. In every state, you're dealing with an entirely different web of state regulations, and a business model that works really well in Colorado might work terribly in Massachusetts, for example. So how do you approach doing diligence on these companies to get you to a point where you feel comfortable putting money to work?
So I backed a company that was pre-product, and there's not a lot to diligence other than the founders, right? I mean, you could sort of look into the space, but the space is a shifting landscape. And so for me, the most important things, actually, there was a really good article a few years ago, it was like New Yorker or Atlantic or one of those things, about the presidency, and there was sort of this debate about like what background do you want your president to be, and what best prepares somebody to be president. And what the article basically concluded was like, there is no other job like that. And so the presidents who are the most successful are the ones who are the quickest learners. And so the thing I like about the CX team that I've backed is they are sponges for people and information, and they are just like constant learners. And if there is someone that they see on their radar, either from the commercial side or academic side or government side or whatever, they are the first ones to jump in and just say like, I want to learn as much as possible from you and really get as much information. The second and complementary aspect to that is, do they have the right kind of ethical true north, right? Because you are taking risks here, and there are going to be areas that are clear regulatory no-nos, and there are ones that appear fine, and then there's kind of a whole bunch of stuff where it's like, well, no one's really said anything about that yet, but here's the way we think it's going to go. And you're putting your own reputation and on the line when you're investing in these companies. So do you feel comfortable tying up your own reputation with this team that, in the absence of coming to you with every single last decision, you think they'll wind up on the right side of things? And so it's a character bet of the founders as much as it is a skill bet, or at least that's the way I feel about it.
So you're investing in people.
Yeah.
Well, due diligence is probably the most important thing that you'll do, and because you learn a lot of life lessons. This business is fraught with dishonesty, people that don't know they're being dishonest, selling you things that don't work. And I joked at being in Vegas at a conference a couple of weeks ago that 95% of the people and the products there won't exist. I will tell you that the grow industry, everyone thinks they have the best grower, the best process, or whatever. Anyone that wants to talk to my partner Sterling here, who moved to Colorado after 15 years of consulting just to deal in the day-to-day world of turning around and working on a grow operation, the definition of yield, all the compliance issues. everything that has to be done, you really need a great deal of expertise, at least on the grow side. And that's to say the least. On, for example, the hyper situation, we hired our own consultants to go in and do some work on their systems. They panned out, but the best due diligence we had is that the state of Colorado and the banking officials agreed with everything they were able to do, and so they basically checked the box which enabled this company to start a banking relationship with Colorado National Bank, and also to be able to go into every dispensary starting next week and use a credit card, which is going to change the entire industry. So I think we're drinking from a fire hose there. Once again, they have tremendous management. And of course, with the Willie situation, you're dealing with industry people that have been in marketing and branding, and they have a tremendous product, and we spent the better part of a year and a half dating them just to get to where we are today. But it's being very, very hands-on, not being an absentee owner, and knowing that you're going to make mistakes, and you have to change on the fly occasionally, and what you think might be working might not. There's going to be problems that arise that I've never seen in any other business, and you have to address those, and you have to march forward. And the last person standing in this business in a couple years, not the last person, but a group of people, are going to be the survivors, and after a lot of bare-knuckle fights, those that are standing are going to do quite well.
Yeah, I totally agree with both these guys, especially Charlie with regards to investing in the space. It's very difficult to do full due diligence on many of these companies. From the loan perspective, it's a little bit easier looking at, as long as you're looking at numbers that are real, looking at revenues and looking at collateral, it can make it a little bit easier. But in terms of like the equity space, it is all about the people. I mean, it's about the pedigree of the people, what they've done before, and how much skin they're putting in the game. I've seen a lot of companies where the entrepreneurs are unwilling to put the amount of capital that they should be putting into their own net worth. Coming from the hedge fund space, I just remember launching my first fund and how much of my own capital I had to put in, and how that made me think about everything much differently. I think that that's something that this industry could move towards, be very helpful.
One of the things I'll add is that it's easier to do due diligence when if you're sort of new to this space, but you're an expert on the structure of the business. So if you're investing in some kind of delivery company, it's easier when you've done investments that rely on logistics. And so I just put out a term sheet, and we're going to soon close on a deal to the company that won the TechCrunch Disrupt competition in San Francisco called AgriList. And they are think about it as a Fitbit for farms, if you will. Not specifically a cannabis investment, but a lot of the indoor growing and potential in the future obviously comes from this space. And so being an investor that has taken old school industries and watched people use technology to apply data to them, like I didn't need to get comfortable with both how they do business and this other space. It's much easier when you come from a position of comfortability and say, oh, okay, well, I've made a bunch of similar investments, and now you're explaining to me how you can transfer this model into the cannabis space. So you want to cut down on the number of things that you're uncertain about. I think that's an easier way to go about it than saying, okay, well, I got to become an expert on logistics and cannabis and these people and all these other things.
So I've got two more questions, and I open it up to the audience if we have time. One is kind of fun, and one might make folks a little bit uncomfortable. So we'll start with the fun one first, and that is this is an industry right now that it's very state by state driven, right? Every state has different opportunities, different regulations, different challenges, and you have a real diversity of opinion on where the best opportunities are. So I'd be interested, and this is one I'll after you guys are done, I'll actually give my own bias here, but I'd be curious to hear from everyone on the panel, what states excite you the most when you're looking at opportunities over the next few years?
So I've been a little bit disconnected over the last 6 months because I've been focusing on my debt vehicle. But I can tell you from things that I've heard, especially coming from my biggest investment in the space with M. Hardeen, the things that I'm hearing about Nevada, Massachusetts, Maryland, obviously California, although I have some reservations there because I think the market there is potentially very saturated. Think of where else. And I'm not hearing great things about Illinois. That's been a constant theme that keeps coming up in terms of patience and how they're actually going to regulate the system there.
I'm still pretty excited about Colorado. I think what I'm trying to do there is to have brand name companies that will be industry leaders that when laws do allow, they will be able to go to other states. I think certain states make a lot of sense. Florida eventually will do pretty well. I think one of the mistakes people are doing now is chasing licenses. The ability for people to go out and spend millions of dollars on applications and tens of millions of dollars just getting ready for, especially in the medical side, they may never see a profit. So I think at the end of the day, you have to be very, very careful in investing in something that sounds attractive, but when you put the pencil to it, you know, where is the profitability going to come from? And the businesses that I'm looking at that I like, I can go and see and touch positive cash flow pretty quickly. And I think that's what people will pay for. So, you know, I'm looking at this as I've looked at a lot of other, you know, hedge fund distressed investments. What is the cash on cash return and what's the quickest way I can get there? But I think if you have brand names and you're cutting edge in the industry, I think when the laws and the wind is at your back, you'll be able to take that to states that you can maximize profit in, as we are trying to do in Colorado.
Yeah, I may be nuts here, but I actually am relatively optimistic, and don't peg me on a date, but that we will actually see national legalization. And I think that it's coming from a really unlikely source, and that's I see this shift in conversation and sentiment around criminalization and the incarceration problems that we have, and it is just very clear that our incarceration system is just not working, right? And the societal impact of putting people in jail for petty offenses and all that sort of stuff. I think that the data has come out and it's just very obvious. And there was an interesting article a couple weeks ago about how you have these like middle and upper class white families who are now dealing with drug problems that they perhaps didn't have to deal with before.
It's a great New York Times article.
Yeah, and it's shifting their opinion on legalization in general because they realize that, like, well, we don't want to send our daughter to jail, we want her to get treatment, and that, you know, changes a whole bunch of things. So I think from that angle, you know, how long that takes and under what regime and all that sort of stuff, like, I am somewhat hopeful that at some point we won't be talking about, you know, state by state.
I mean, obviously that's the ultimate goal. I think it's going to take a little longer than some others do. Maybe that has to do with the fact that I spent 13 years as a policy advocate in this issue, not on the business side, and been through a lot of frustrations. And particularly the federal government is just incredibly difficult. And I think Ethan Nadelman's point was exactly right, that this isn't inevitable yet, and we can lose ground. And I think that actually segues really well into my next question. But before I do that, I said I'd give my own opinion on the states issue. I tend to agree largely with you, Fred, when I look at the opportunities in the near term. I'm not as excited about Colorado, only because I think it's really oversaturated, and the companies that are going to do the best they're already there. And so there are some opportunities. I think, Steve, you got in kind of at the right time. In Colorado, it's a harder place to do well. I think the markets that really excite me over the next couple of years, in particular, really are Nevada and Massachusetts. Nevada, for obvious reasons, Vegas is biggest tourist market in the United States, and they will very likely legalize for adult use next November. And Massachusetts, similarly, is very likely going to legalize for adult use next November as well. And when you look at the impact that legalization has had on the tourism industry in Denver in particular, it's measurable. It's very real. Denver's not near anything. There's nothing within a 4 to 5 hour drive of Denver, and yet people are getting on planes and flying to Denver because marijuana is legal there. Well, marijuana is about to be legal in Massachusetts. It'll also probably be in Rhode Island, but nobody vacations in Rhode Island. Maine and Vermont, but both those states, you actually have to go through Massachusetts to get to either of those states. There's something like 20 to 30 million people within a 4 to 5 hour drive of Massachusetts. Springfield, Massachusetts is a 2 hour drive north here of New York City, where you got about 12 million people that can, within 2 to 3 hours, be across the Massachusetts border. So when you look at an adult use state in the near term, I think there are some really tremendous opportunities looking in Mass. Also a little bit biased that I'm now located in Boston, but I do think I do stand by that. But to the next question, you brought up the issue of mass incarceration and the drug war in communities disproportionately impacted by the war on drugs, and that is something I think that as an industry, we've done a really poor job of incorporating those folks into this emerging industry. And I just look around this room. It's very white, it's very male, and it is a reflection of what the industry looks like. And if we, and I say this as a long-term advocate, and to channel my inner Ethan Nadelman here, if we ultimately wind up forming an industry that does not include the people that have been the historical targets of the drug war, and we should mention that in a lot of these communities, the drug trade and the marijuana trade is the only source of income for a lot of people there. And so we're taking away a real source of income from these communities and not allowing them to participate in the industry. In fact, in many cases, the laws themselves prohibit anybody with a drug felony or the felony conviction from participating in the industry, even in an entry-level position. And we know that drug laws have been targeted in inner-city communities of color. They're much more likely to have a drug conviction, despite the fact that they're no more likely to have used drugs. And they're being precluded now from entering the industry. So what I'd love to hear from folks is how, as investors, can we help to ensure that this industry does not mirror the mistakes that most other industries have and does become more inclusive of the folks who have suffered some of the greatest social justice harms at the hands of the war on drugs.
I think to some extent, the people that you work with are going to be a reflection of your own network, right? And so to the extent that there is diversity in your network, it's going to be a lot easier, right? If there are investors that you can bring into the table or entrepreneurs that you bring to the table and say, hey, by the way, there's this other set of reasons why you should get on board with. I mean, I think it just starts with the investor's own network. And I think for me, in my fund, I've specifically made a bet to say that, there's a sort of insidery group of people who have the demographic of person who has launched companies before. And I think there are a lot of investors that say, well, the next biggest things are going to come from that group, or the next biggest things are going to come from outside that group. And the way I operate my fund is to imagine that there's going to be more opportunities outside that group. The less and less we have to do deals of technologies coming out of MIT and Stanford and in a much wider variety of communities and things are more available to people. I think that's just generally a good bet for investors, and I think it starts with sort of building those relationships and outreach. You are seeing more diversity from some of the prominent celebrities who are getting involved in the space. And I think building some of those relationships. I think Nas is an investor in Ease, I think, and Snoop is very public about doing all that sort of stuff. And so starting with sort of the leaders and most visible people in those groups is a good start.
I do agree with a lot of the celebrities wanting to get people involved that are pretty diversified. I'll take it another way, what we've tried to do, especially in Salida, Colorado. When we started this project basically from the ground up, Salida is a small town, and now, fast forward just 2 years to where we are today, we're the largest employer in the town. And so we've created many, many jobs, good paying jobs, very good paying jobs with health benefits, and people are taking pride, and just this crazy idea we had to do this is now, I don't want to say the talk of the town, but we've been a great corporate citizen, and we've provided a lot of help to families, people growing up there, and because of the operation that we have, people have a better life today than they did 2 years ago.
It's a great question, by the way. I would like to look at it more in terms of racial divide. I think that a lot of us in the room here, I mean, if you look, it is pretty much all white and male. Sorry, females, but it is. Every event that I go to, I find there to be a big disconnect between the High Times group and, say, the ArcView group. Or and I don't have a solution as to how. I think it's more of a societal issue more than just cannabis. I think that there's a divide there. I think it would be extremely helpful for this industry to include those people that have been persecuted as a result of being a part of this. But I don't really have an answer as to how that's actually done.
I mean, unfortunately, I think that's largely the case. There are some answers out there, but I don't think anyone in this industry has really found it. I think one thing that investors can think about doing, and I'm actually in the process of putting together an advisory committee to put together something to do exactly this, would be to have some investments that are that have some strings attached, and that have some contingencies that, in order to receive the money, or to receive the money at a somewhat discounted rate, you have to hire folks from disproportionately impacted communities. You have to put protocols in place to train them properly so that they can get up to speed with their counterparts who might be hired for the same entry-level positions that are coming from a background where they had better access to education, and to promote and to eventually provide ownership. And in doing that, they can get a lower interest rate, they basically can be these business owners can be monetarily incentivized to hire these folks, train these folks, and give ownership to these folks, to make sure that the industry is a little bit more diverse and does help right some of those societal wrongs that have been a product of the war on drugs. So we've got just a couple more minutes here. I want to open it up, see if there are any audience questions.
Kris, can I go to that thing about diversity, because I want to bring up the Maryland experience. Can I take a minute? Sure. I just want to mention the Maryland experience. There was a real drive with the regulator in Maryland to try to encourage diversity. And when you look at diversity in terms of who can apply for these licenses, you've got basically three kinds of licenses, basically: growers, processors, and dispensaries. Growers and processors are capital intensive, and so the minority community is going to have limited opportunity to do that. And when you looked at Maryland, they really tried to reduce the barriers to entry. That's why they got so many applications. You didn't have to put much money up. You really didn't have to do much of anything. Just fill it out. So those opportunities were primarily available at the dispensary level. But then you go back to the application process and look at the questions, and you couldn't possibly answer those questions right if you hadn't already run a dispensary, because the procedures had to tie into the regulations. The regulations tied to the questions. So essentially, the diversity community was frozen out because they had no prior experience and couldn't answer the questions, so they couldn't qualify. So I just want to point that out. That's a comment and not a question.
I wanted just 2 points. I wanted to go back to the diversity in a minute. Everybody left off the state of Pennsylvania, and they're voting on that in, I believe, in January. Is anybody bullish on Pennsylvania? And then to add to the comments, the gentleman from Maryland was saying before, there is a solution. The solution sitting in this room. If we give the money to the diverse people, then they can open the business. It's not a very, very difficult solution. Solutions in the hands of the people with the money. But the question is about Pennsylvania.
I can start off on that one. I've been following that really closely because my company helps folks win these licenses around the country. So something that somebody who doesn't have experience running a dispensary, they can hire a consulting firm to help them do that, but that's harder if you're coming from a background without capital. In Pennsylvania, I'm not especially bullish on it, unfortunately. I think what you're going to wind up getting out of the legislature is going to be a fairly watered-down law. It's unclear. There's a lot of horse trading going on behind the scenes right now in Pennsylvania. You've got and I forget which one, but either the House bill, there's a House bill and a Senate bill. One of them is really good. It's a big open system, a large number of licenses, a really wide open qualifying condition list, which would lead to a lot of patients. The other one looks more like New York or Minnesota. No smokable products, limited qualifying conditions. The final bill is likely to wind up somewhere in between. In fact, the insider info that I'm getting is that it's likely going to ban any smokable products, but have a wider qualifying condition list. So you may see more people that would qualify to become patients, but the stores will be prohibited from selling the products that most patients are used to in Pennsylvania. So I think that will likely lead to a much longer ramp, despite a decent qualifying condition list, if that's what we ultimately get as the final legislation.
Are they going to actually pull the trigger in January, or is that just a pipe dream?
I think they will. I think that Pennsylvania will pass. I don't know if it'll be January, but I think it'll pass before the spring. The question really is what is it going to look like? And I'm not optimistic that it's going to be a great market based on what we're likely to get out of the legislature.
Okay, thank you.
And unfortunately, I think we're out of time here. So if anyone else has any questions, we're all going to be here. You can come find us in the hallway in the next break. But thank you all for your time.